Going on, everybody? Wanted to hop on, talk a bit about SRNE and ACB, which were plays that I just didn't get around to reviewing during the week, but now that it's the weekend, I figured I might as well go over the big winners from Friday and just take a look at them, review them. This is how you can get better, just by simply going back and taking a look at what happened and imagining yourself playing these things, and ask yourself where you could have got involved and where a good buy would have been. So in the morning, I noticed SRNE off pre-market scans, just a basic percent gain scanner. It was ramping up, and I didn't really know why it was ramping. I think on the Twitter feed, I saw some people talking about how they claimed that they had a COVID-19 cure. And so after this surge happens, then some news articles get released on that. Double click this and take a look. Okay, so you can see all the news here. Other links to get more information as well. Okay, so you can see very mainstream news. That was a report on Fox News about the company. So that's a big deal. Basically, all eyes are going to be on this company for the day, and so the next part is, well, how do you play this? I always have a hard time with tickers that have this much volume. They're very intimidating to me. This is a 105 mil float. The volume is absurd. I think one of the most volume days I've seen on a ticker that was trading like in this price range, 500 million shares of volume for the day. That was a historic day for the stock. It's never traded anything close to this much volume before. And so when you get big volume days like this that, are so much bigger than anything it's ever had, it can also make for some of the biggest gains the stock has ever seen in one day. So pretty crazy stuff. So now I'm just going to talk about how I would play it. I could have gone back in time. So there's like a few different trends that you could look at. You can see here it's making a downtrend and it confirms to the downside, so I would have not gotten involved in this area. See, it makes a channel here, and it also confirms to the downside. Channel here confirms to the downside, but then we get like a reversal candle here. And it holds kind of a horizontal double bottom, which we haven't really seen it do. So this was a nice double bottom hit. And then it just kind of breaks out of this downtrend. Say it's more like that. So you get this situation where maybe you could take an entry on like this 3rd-minute surge. So it bounces up, it holds, and then it breaks out over that 1st minute, over that 399 level. So you could buy it right in here. Let's say you get a $4 fill. and then you could just risk 390. I think that would have been a very appropriate entry for a long trend hold. And as far as what size, well, that's all up to you. I mean, if you look at the play, 800,000 shares of volume happened in that 1 minute, so you can pretty much buy as many shares as you want, but it has to be towards your skill level. But what I mean by that is, given the TA, proper risk would be, depending on your strategy, you could risk new low of day, or you could just risk the reversal of 390. I would probably risk 390. So for 10 cents a share, I would probably just scoop 1,000 shares. Because I can handle $100 of risk, but I don't really like to risk more than $100 per trade at this point in time. So it really just comes down to what you want to risk and what risk that you can handle. Because, if you take too many shares and all of a sudden you're risking way too much money, you can just, mentally that's hard to handle, and then you can just abandon your plan and sell, and that's incorrect, and you don't want to do that. So that's why it's important to take a size that fits your skill level. So you get a nice uptrend, and yeah, I mean, stick to the plan. So it just keeps uptrending and reaches 530 from the $4 entry. If I could go back in time, where would I sell it? Let me see. I most likely would have sold it around 480. Yeah, I believe I would have sold it at 480. That's just where I would have locked in profits on this first wave. And so that's, for every 1 unit of risk, you're getting 8 units of reward. What I mean by that, you're risking 10 cents. Would have locked up 80 cents a share. You get it. Your risk, the risk reward ratio is very good. So that was a really nice play. Now, there is a secondary play that I think this is the play that most people took, actually. This is afternoon entry. And I can see why. I mean, the development was much easier to get involved with. Makes a clean triangle setup. There's a couple entries you could try taking, depending on just what you like as a trader. I think there's probably hundreds of thousands of combinations of strategies and entry zones and all this sort of stuff, time frames, probably hundreds of thousands of strategies. You can do whatever you want, so it's part of why I like trading so much. You can really be imaginative and creative and make it work however you want it to work. So the squares are probably entry zones that I like, that I would take. Trying to think which one I would realistically take. I wouldn't take this first one. No way. Don't think I would have taken that just because it's in a downtrend and it's hard to know if it's going to continue the downtrend here or not. I think I most likely would have just waited for it to fully develop and then take this breakout of the ascending triangle. Because what this is a essentially you're looking at a higher low on the very zoomed out chart. So the dip in the morning, okay, pops up, you get another dip, but the dip in the afternoon is a higher low. and it bounces off that higher low, and I probably would have just taken it right here around 490, risking the failure of the trend to continue up. If it doesn't continue up and it tries to dip back into this range, I would have just gotten out. So let's say I buy it at let's just say I buy it at 487. I would risk the reversal of probably this key support at 470. And that's part of why I really don't like these very large volume and large float plays, is because, I mean, the way the TA forms, it seems like you have to risk more than what I normally like to risk. So 487 entry, I would have had to risk, based on the TA, I would have had to risk 470. That's 17 cents a share. That's really more risk than I like to do. So I believe I would have bought maybe 400 shares. That seems reasonable. I mean, I really don't like risk. I don't like to risk lots of money. It's not what I'm about. Okay, I don't like doing it. So I would have taken a very small share size and adjusted for my own comfort level. So honestly, 400 share position, and you're looking at in 1 minute, this traded 800 or 900,000 shares. I would have only taken 400. That's just what I could have handled mentally at this spot, I believe. But then you just gotta stick to your plan. So, okay, so 487 entry, it winds. You know, I probably would have locked in profits at 610. Honestly, it's about a $500 win, I believe. It would have been a solid play. And then after that, definitely another entry. See, two spots. If I perhaps jumped the gun entry, could have been there. Or if I waited and took the flag, could have been here. Either way, the entries have good risk reward. Just another play that I would have taken with, let's say, let's just call it 400 shares again. And you let it roll. Probably would have locked in profits around 780s. And I would have been done with it after that. I wouldn't have touched it again. And that would have been that. But again, that's like, what? That would have been like a $700 play? So the point I'm trying to make is, look, take a share size that fits your skill level. You take a share size within your skill level, you're going to be able to stick to your plan and let the play run and lock in profits accordingly. And even with that small size, I still could have nailed it a few times and made, what, $1,000, $1,500 throughout the day on it. I would have been very happy with that, you know? So, pretty nice. Again, like, this is what I do on the weekend. I just go back and I just take a look at some of the plays that I missed, you know? I wasn't comfortable with this. I had a lot of shares trading on it, and I just wasn't comfortable. It's fine. But I do go back and look at it, analyze it, and put myself back in the situation. I pretend I'm trading it, and I pretend, you know, I'm entering it and what I would try to hold for, and, you know, just imagine that you're back in real time trading it. Because that's kind of how you can gain some experience, by reviewing. Very cool. I think that if I mean, pre-market, pretty tricky to catch that. But maybe on this first trend change, this is where you could have taken probably the biggest size. I mean, I still probably would have only taken 1,000 shares, but like this is a spot that you could actually take, 5,000 shares perhaps, and let's say you actually buy it a little earlier at 395. I mean, it's hard to buy at 395. That's not really, that's a bit scarier, but I'm just trying to think because a lot of the best entries you really do have to guess. Guessing is very tricky because if you buy it too soon, sometimes it can dump on you. You really do need to wait for that solid confirmation of the trend change so that you won't get dumped on. So yeah, I'm still trying to work it out in my head how to get involved in this with size. I'm finding it difficult because the range really did call for 10 to 20 cents risk management, and that's not easy to take size when you're looking at a range like that. I have a pretty phenomenal play. The other ticker that I wanted to go over was ACB. So this one was a reverse split not long ago. See if I can. I don't see somewhere in here. I mean, I would tell you the exact split ratio. Not really sure what it is. It went from 50 cents to $8. It's probably like a 1 for 15 split or something. So I actually wish I would have saw this a little earlier. I kind of forgot about it because I love playing splits off when they get really sold off. I like playing the first green day on splits. So on this fourth day, you could have dip bought it and got a really great entry on it in the morning. So like once it dips and kind of holds and then reverses, oh man, that 540 entry zone, so good. So good. I just kind of forgot about the name. But because it was so sold off and it was the first green day off the split, that's really why it had this massive 550 to 680 run, and I wouldn't have held it overnight into an earnings report. That just doesn't seem wise. So there's no way I would have held it, but they do end up becoming an earnings winner. So the next day it runs. And so yeah, I mean, I could have definitely gotten involved in the morning on this dip buy. Dips right out the gate, then it pops back up, and it even pulls like a red to green. So if you take the red to green at like 850, risking, I'm not really sure where you would risk, maybe 830. I mean, I really don't like getting involved in the morning on choppiness like this. So I know I didn't play it, and if I went back in time, I still wouldn't have played this. I don't really like this that much, but what I did like a lot was this curl. So in this area, I really like it. Yeah, I really like this. So you can see a double bottoms here. You get one bottom, you get another bottom. So there's some different options. I mean, you can take it off of this dip when it confirms around like 935, just risking 920. I like that. I also like playing this breakout right here around 955. I like that quite a bit. Risking, this one is actually probably the best risk reward I see. 955 confirmation entry with a 950 risk. That's probably the best risk reward that I see on this the whole day. So you'd only risk 5 cents a share. which means that you can actually take 2,000 shares. 1,000 or 2,000 shares. I'd probably only take 1,000 still. $50 risk. And then you just stick to the plan and you let it curl. So it curls up, comes down, high or low. Again, you just have to suck it up and stick to the plan. It does end up holding, and then it winds again, and you get a nice afternoon run. Let's see, if I bought it at 9.58, I would be selling it around 10.50. So I would lock up $1,000 of profit on $50 risk. Then, if it develops again, which you can see, it does develop again very nicely. This is really nice development. Confirmation entry again at like this 10.50 area. And then I would take 10.50 to for like a secondary play. That's kind of hard to say. I feel like I would have just locked up $500. So basically 5 minutes later, I would have just sold it into the $11 test, and I would have just made another 500 on that. So if I could go back, that's how I would have played it. Another really massive scaled play, massive volume. And this is a weed ticker, cannabis stock. Kind of interesting. So, a little bit longer style video for the weekend. Just because I'm chilling, just hanging out, and thought I would review some of the biggest plays from Friday. I like to take my time when I'm reviewing, and again, just use your imagination and think about how you would have played it, what you like, what style you like, what risk that you can take for your skill level, and how you would manage your plan and stick to that plan. So hope you enjoyed the review, a little study session for the weekend, and I'll see you on the next video. You can like and subscribe if you enjoyed it. Thanks.